Shares tumbled this morning as investors grew increasingly anxious about the economic impact of China's spreading virus outbreak, with demand spiking for safe haven assets such as the Japanese yen and treasury notes. Japan's Nikkei average slid 2%, the biggest one-day fall in 5 months. China announced it will extend the week-long Lunar New Year holiday by 3 days to February the 2nd, and schools will return from their break later than usual. The Nikkei closed in the red, ending the day out at 23,343 points, while both the Hang Seng and Shanghai Composite are closed for the Lunar New Year celebrations. To Wall Street now, where that fell in a broad sell-off on Friday as investors fled equities on growing concerns over that scope of the coronavirus outbreak, capping the S&P 500's worst week in 6 months. All three major U.S. stock averages turned sharply negative, with the S&P 500 seeing its biggest one-day percentage drop in over 3 months after the Centers for Disease Control and Prevention confirmed the second case of the virus on U.S. soil, this time in Chicago. Let's get a wider market picture. Arabile Gumede is standing by at the Johannesburg Stock Exchange. Very good afternoon to you, Arabile. Lots of red on the board behind you, matching your tie. What's happening?
Yeah, unfortunately, it is a bit of a negative day across the board today. More than 2% lost thus far on the JSE All Share, below that 56,000 point mark. So massive losses, really just mirroring the rest of the world, I suppose, right? So global stocks seem to be going on the downturn. A little bit of sentiment around that coronavirus and the spread around whether demand will be kept up in particular markets, I suppose. And that is the real question that markets are perhaps looking at. Even the oil price going down quite significantly today, below $60 a barrel, and even headed towards $59 a barrel, going down to its monthly lows there as well, around 2% lost on that front as well. Unfortunately, things like platinum also suffer in a time like this, going below that $1,000 a fine ounce mark. But gold, of course, becomes the safe haven that begins to gain in a time like this. Well, if you don't believe me, let's check out those numbers and we'll get into a chat right after this. All right, well, as you can tell, then the market going into some negative territory there, with all the numbers clearly showing that picture. Let's have a chat to Bright Khumalo then from Vestact Asset Management as we unpack this picture live from the Johannesburg Stock Exchange. Bright, thank you so much for the time. A big fall, 2.33% for the All Share this afternoon. Everything going down, including the platinum miners, nearly 4% down there. What in the world is going on?
I guess we can still blame the coronavirus, but actually I think it's another story of, where you have more sellers than buyers. And obviously people are looking for excuses to cash in on some of their profits that they've made in the past almost 10 years of being in the market. It's been a very good bull market outside of South Africa, of course.
Sure.
Even South Africa hasn't done actually all that bad in that period. So let me include South Africa this time around, actually. People are looking for excuses, and the coronavirus right now is definitely one of them that people are cashing in.
Yeah, why would you need an excuse to go out there? I mean, if the coronavirus is sorted out very soon, you go back to having that bull market, presumably.
Money managers are a weird, kind of species. I don't understand them myself, and I'm one of them. So I always say, if you feel uncomfortable by being in the market, take some profits then. Don't wait for an event to make you, take some of those profits. But again, the coronavirus is obviously down in Asia, and though this thing is started in the Asian markets, and like you said, and then the rest of the world is following through. Yeah,
look, January has been an event-filled month, right? And a whole host of stuff has happened around any sort of element here, and we could really lead on with the Brent crude price now just below that $59 a barrel mark. That's a big fall as well, having set to nearly $71 a barrel at some point
not so long
this
ago.
month.
Yeah, not so long ago, because everyone was worried that there wouldn't be any, enough supply from the Saudis. The price should go up for longer because it's going to take them very long to actually fix their problems there in Saudi Arabia. But again, that has proven to be just another a non-event, because you see the market's still being driven by the elements of demand and supply. Again, we saw the concerns around World War III. That didn't do anything to the markets. That's another thing that doesn't make any sense. You think that's more of a risk as compared to the coronavirus, but then again, coronavirus is a little bit more detrimental because you could wipe out nations very quickly.
Yeah, certainly. And you're seeing, of course, Chinese cities sort of trying to make sure that they
quarantine.
They quarantine quite a few people, so that certainly is hurting. All right, let's get into some equity news before we head off into that rand picture. We saw Woolies coming out with a trading update today. It seems like they're seasonal trading, and when I say seasonal, I mean really just a festive season. That seems to have done well for them. David Jones not doing too badly in that period as well. So the 20-month trading statement looking all right, if one would say.
Yeah, well, I don't know about all right. Headline earnings, expected to be down between 15 and 20%.
Yeah.
Again, David Jones still the biggest laggard there. I don't know, man. It is what it is. It's not doing well. It was a bad investment. From 21.5 billion rands to 9.5 billion rands. It's bad. You can't.
Has the new CEO taken on sort of the worst job possibly?
It's probably one of the easiest jobs because there's turn around something that's already turning around. So that'll be nicer for him. But looking at the local business, which is the core business, you're looking the food side of things. That's doing exceptionally well. Still growing at 7.8%. Why, you'd ask yourself, why did they actually leave a working formula to go try something wild? Again, you know what happens when you have CEOs that are trying to impress their spouses. You end up losing judgment in the process.
Yeah. So certainly some hurt. Is there still a long-term sort of hurt that you'll find with that Woolies company as a whole? I suppose some would say that some of the parts are really great. It's just the effect really of David Jones really outweighs everything else. At
45 rands a share, it's the lag, the what do you call it?
The drag down.
The drag basically on that share price is about 5 rands. That's worth of David Jones, right? So in terms of the valuation side of things, because at $50 you're basically getting David Jones for free. So at this current level, yes, David Jones is coming there and hurting you a little, but at the right price, this could be a great investment.
So
going forward.
Not the worst time to get in.
Yeah, but what I didn't understand also is that over 300 million Aussie dollars of investment of 7 floors of Woolies experience or David Jones experience when the thing wasn't doing well, instead of actually fixing the problem, you go throw money at it and trying to hope for a Hail Mary that something happens there. Didn't make any sense. Again, they're talking about reducing space in Australia. It takes me back to the 300 and so million US dollars. What were you doing then if you're going to be reducing space a few years later when everyone was telling you that Amazon is going to be big in Australia?
Yeah. Is there a trust factor coming back into Woolies now, do you reckon, just because of the new CEO? I think Ian Moore had spent up all of his goodwill there.
Definitely. I mean, the guy's got a good track record. He's known for turning things around. Levi's jeans, actually, especially in North America, wasn't actually doing all that well, and they've tried to do what they had, with the resources that they have, and they've done exceptionally well because now people are back to wearing Levi's, and I mean the sales are showing, and obviously at some point they were talking about even taking it to the market. So
I still don't have a 501 jean. I think I'm going to get myself one of those actually. All right. Other equity news, Sasol. Lake Charles has always been the continued drag. They got an explosion earlier this month, like I said, filled with events, was January. Now they're getting the assessment that things aren't necessarily that bad and it's limited damage. Some good news there. Does that give investors some hope that, okay, finally we'll get somewhere with this project?
I absolutely have no idea when it comes to sentiment around Sasol. It's just so bad. It's actually unbelievable at this point. I'm sure at some point you have to ask yourself, is the bad news really that bad? And Sasol is one of the, case in point. But right now they still have that oil, dragging them down as well, the oil price. So, it's it's a bit of a triple whammy here. You've got management, the oil price, and the actual operations blowing up. It's not good to see. But like I said, maybe it's all priced into the share price, and if the oil price behaves, it could be an investment of a lifetime. I mean, we've seen this with the likes of the platinum miners that you were talking about. Yep. They had a near-death experience not so long ago, 2014, 2015. And today, they're some of the best performing stocks, and they continue to be. And I mean, a lot of things have had to be right and, you know, to be in their favor in that period, including, you know, the metal prices, which is basically...
You have timed it perfectly.
In hindsight, it looks perfect, but yes, these things happen. But so don't be quick to write off Sasol as a company. I mean, they've got the biggest brains in the southern hemisphere as a company, so you can't really write them off fully.
Yeah, around 280 odd rand, I think, a share somewhere there. So hopefully it doesn't fall any further. Really,
it has to fall further before it goes up.
Oh boy, how much further is, I suppose, the question. Bright, thank you so much for the time, but really appreciate it. Bright Kumalo there from Vestac Asset Management, joining us right here at the Johannesburg Stock Exchange. Look, it's been a torrid day thus far for the Johannesburg Stock Exchange, and mostly the global market picture. That coronavirus really spreading its way right through into that market picture. How negative does it get, and how bad do things close? Of course, you'll continue to find out right here on SABC News. Do stay tuned, my colleague Nzinga Qunda, joining you right after the short break. For me, though, that's where the buck stops.